Hi everybody, this is Gary Dean with Sentiment Timing, and this is a free video report for Thursday, February 16th, 2017. I hope you guys have been enjoying this melt up that's been taking place, and I got some interesting things to show you moving forward, and then also go over what some things that may be playing out. So one of the things I've been talking about is that we have a kill zone drop that is pending. Woody has predicted every one of these weeks in advance, and what I'm going to show you is the one that's upcoming. He actually called months in advance. So, without further ado, let's get started. Look at this date here. This is November 17th, 2016. So, one of the things that he's been saying over and over again is that the profile allows for a good 3 to 4 month decline. Note to bears, what is the best way to set up a 20 to 30% market decline? Spike up into new highs, maybe 2300, 2350. The S&P was trading at 2180 when this was put out. So the thing is that the timing part was it's not due until early 2017. So going back all the way into November, you had a proper roadmap as far as what is going to be played out. Now, the 2300 and 2350, we're more on the time end of things. So this was just something that, Woody's been doing this for 40 years. So, he has a good idea as far as where things could turn. But the analysis is primarily based off of time. But it's just amazing how these numbers were hit. And this was called going all the way back to November 17th. And this is when most people were thinking that the market was going to crash because Trump got elected, and Woody was one of the only ones that were saying that we were going to rally, and these numbers actually got hit. So this was on December 6, 2016. And what he put here was that there is a wonderful bubble high due in early 2017. I'm looking at the February zone right now. So the thing is that it's go a couple months ago. He's been saying that we're going to be looking at a 20 or 30% decline, but there's a chance that the S&P is going to get all the way up to 2300, 2350, and the decline's not going to come until sometime in February. So we're now approaching that period. And one thing that Woody and I have been talking about has been with the kill zone, there's a time period that he looks for. And as we get closer from there, he starts zoning in on certain aspects as far as a particular date that it could happen. So right now, there's a process that's going through, and we got the panic buying melt up high. We've had high sentiment, which I'm going to show you, and now what happens? He's going to start pinpointing when the decline is going to start. But knowing what has taken place in the past, because that's what these profiles, what Woody puts out, they're all based off of things that have happened in the past. And if you know the past, you can tell the future. And Woody is one of the best at it. So yeah, I thought that this was just very interesting how going all the way back to November and even December, this was exactly what was called, and a lot of people were caught off guard. I'm not going to lie to you, me personally, this melt up that for the last, like, say, week or so caught me by surprise. I was expecting a bounce, but I wasn't expecting a melt up the way we've been seeing. But it made sense, and this is why, because this is what Woody had said. So one of the things that the profiles that Woody does and what we do at Sentiment Timing is that we believe that human beings and the markets are irrational. We get these irrational moves like we're seeing right now, where it's a melt up and nobody thinks the market's going to go down. But these are the elements that creates market opportunities. So one of the opportunities that's approaching is this kill zone move that Woody's anticipating is could be a 20 to 30% decline. And the best part about it is that there's actually two of them that are scheduled for this year. So it's not the call of a new bear market, but we haven't seen a 20% decline, I think, since 2009, since this rally started. So we know through Woody's analysis, when the markets are going to become and human beings are going to become irrational, and then we start to plan ahead as far as how to start positioning yourself and what's the specific dates that are going to be playing out. So the timing factors are the technical timing indicators that Woody does to predict it. So we know that the time part was going back in November, that he was predicting it was going to be sometime in early 2017. February was the time period. And sentiment, one of the things that's been said is that we have to see a number of a series of very bullish sentiment readings, because that's telling us everyone is going to be on that side, and that's needed for a crash like move, because if everybody is anticipating a drop, it's not going to happen, because it just doesn't work that way. The majority is always going to be on the wrong side, and we can see everybody piling in. And when I'll show you in the sentiment numbers that this is exactly what's been playing out, and it's crazy, because I really honestly have never seen something play out this way, the way Woody has kind of predicted things. So right now we're in this euphoria phase. You do not want to be jumping on, listening to the talking heads saying that we're heading to 3,000 on the S&P. You got to get in now. Euphoria, when everyone jumps in. If you're going to trade like the institutions, once we get into the thrill part, you start closing out your long positions. Euphoria, start building a short position. Once we get into the capitulation, you start covering your shorts and you start building your long position. So that's really the goal of what we do at Sentiment Timing, is let you know when we're entering these euphoria phases and when we're entering the capitulation. So you simply either close long positions up here and put stops in, or you take a short position and here you close your shorts and start to look for a long position. So here's a piece of today's newsletter. And one of the things that Woody was saying is that we have had extremely high daily sentiment numbers, and they continue, and this persists with the end game, which may even end with an exciting upside characteristic. So we were alerted in the morning that the 5-day moving average. This is an alert that we sent out this morning, that the 5-day sentiment average has risen up to 94%, and it's a rare occasion that we see something like that take place. So being patient for getting aggressive on the short side has paid off. We've been saying that the long side has been a little bit dangerous because we could have turned any time, but there's never been a time period that we said get aggressive on the short side, because the kill zone was not there. So we have the kill zone that's approaching. It's not here yet, and again, we know when these. When it's going to be coming, and as we get closer to that time period, that's when exact dates are going to be put out. But like I said, going back to November, he was predicting that we were going to see this in sometime in February, and here we are. So here's these high sentiment numbers here. You can see this is exactly what's needed. So we don't really have any shorts in the market. They got squeezed over the past 7 days. We know everybody's panic buying right now. So if we go back to here, where is everybody? Everybody's on the buy side. When everybody's on the buy side, that is what's going to tip the boat, and it's going to be something that it's going to be, there's going to be fantastic money to be made with this. So we're running. What the only special we're doing is a $74.99 for 1 month. Use the coupon code is 12017. And anybody that does that signs up for the sentiment timing, you are going to be getting a free membership to the Markets Path. I charge $89.99 a month, so it's a pretty good deal on that. So let's just take a quick look at our regular charts here. Wave counts. We have 5 waves up. That's giving us a clue that we should get a pullback someplace down to the 22.17, possibly even down to the 21.40. And it's still a bullish case. So here, this would be almost a 200-point decline, but yet still bullish. Does that fit the kill zone case? Absolutely, especially if we see 200 points taken out in 4 or 5 days like that, and that's pretty much what typically plays out with those. On the 15-minute chart, you can see that we found buyers at the moving average here. Once that gives away, we're going to see a quick drop down to the 23.19. But really what the bears have to do, they're going to have to get it through this this 2185 level. That's the major support, and then down at this the 2166. So once they get through there, that's when we're going to see the panic selling hit. And like I said, most people, they're not even going to know it's happening. It's just the way that this market works. People get mesmerized into either just buying or just selling, and they don't understand that there's a turn that happened. So they stay on the same side, either buying dips as the market's going down. Then they panic, capitulate, sell, and then the market's going up. And everybody's so used to shorting that they're shorting the whole way up until they get forced to cover, and then everybody's jumping back in at the top. And that's really the way these sentiment cycles work, and they repeat over and over. So with that, enjoy the rest of your week, and I will have our next update next week.